What's going on, guys? Gabe with ReviewDork and AMC. Green today, up 2.16% currently. And you guys see we are in an upward trend. This is the minute chart. Current volume, 33 million. We had a high of 52.55. And I know a lot of you guys are aiming for that $55 strike. And I hope you print on Friday. Let's look at the RSI showing strength above 50. Again, anything above 50 shows a strong trend to the upside. We also have the MACD and the histogram showing that we are in a buying cycle, which means the bulls control the price action. Now, I want to look at the daily here because we are certainly respecting this trend line here. And if anything, we are overachieving that trend line. If you need more data points, we can go to the 4-hour here and you can see the pattern. You could see we hit demand zones and then we hit supply zones and we rinse, wash, and repeat. What am I looking for? I'm looking for us to hit another demand zone, and this can send the stock to the moon, figuratively speaking. We want this thing to stair step its way up because it discourages other individuals to FOMO and then panic. See, if we have a 100% return day, well, you're going to have guys who buy in at the top thinking they're going to get 1,000% return, and then guess what they're going to do? They're going to sell because their wives told them to and said, "Hey, Johnny, why'd you bet the farm?" You know what, Johnny? You should have betted your wife too. Let's go ahead and look at Vortex data here. Short interest, 20.23%. This is probably the second highest. Actually, Vortex tweeted that we have seen the highest short interest in the history of the stock, and that's great. But what I want to look at is estimated short interest. And if we look at this graph here, we had reached an all-time high before we saw short interest plummet, and then the stock ran. Now, if we zoom in even closer, we could see we reach an all-time high here at 19.08%, and then we make our move right here. You guys see that big green bar? This tells us we have a demand zone, and from there, AMC began to skyrocket. Let's go to Benzinga here because Benzinga is talking about the ROAS, and currently AMC's ROAS based on second quarter is 0.21%. Now, this isn't beautiful like Cardi B beautiful. This is beautiful like the girl next door maybe, right? But this shows that AMC is employing their capital and making a return. So let's go ahead and look at the bullet points here. Return on capital employed is a financial ratio that measures a company's profitability in terms of all its capital. Now, let's look at the weekend because despite it being NFL kickoff, Shang-Chi still holds the #1 spot. This is amazing. Now, you got to remember the movie theater's product are movies, and then they make money on concessions. So as long as we're getting movies in the movie theaters and we have Venom October 1st, which I'm very, very excited about, these titles are what brings people to the movies. And so your outlook cannot be anything but bullish. Now, let's go ahead. Disney to debut the rest of their films, which includes Eternals and The West Side Story, exclusively in theaters before sending them to streaming. And this is a show of confidence that movie-going will rebound. We are seeing incredible numbers, yet consumer confidence is not yet 100%. Meaning, with the audience that are going to the movies, AMC's outlook is still looking pretty good. You guys remember back in August, AMC reaches a deal with Warner Brothers for 45 days theatrical exclusivity in 2022. Now, if your short thesis was that streaming was going to kill the movie theaters, you were absolutely wrong. And if we go back to Vortex data, there are a lot of people who are saying, no, no, no. They want to be wrong, or do they want to be the catalyst to the squeeze? Listen, guys, if you were holding even when AMC ran up to 72, retraced down to $29 just a month ago, and you're showing conviction, you're showing diamond hands, bless you. Bless you. We are going to continue to burn the shorts alive. Now, usually they say, if you want to make money in the markets, you got to follow the smart money. But it looks like the smart money followed the dumb money's lead. And essentially what we've done is created the foundation, an arena, if you will, because I tweeted on Twitter that it seems like institutions are left to go to war with one another. And I also said, finish him. What do I mean by that? If we're diamond handing 80% of the free float, that means 20% is available to the institutions. Now, if we have a 20% short interest versus the 20% availability that's held by the institutions, and we ourselves are simply holding 80% and taking that off the table, you know what? Net short interest is actually 100%. Yes, we want to rip. Yes, we want to go to the moon, but I do prefer the stair step. And the reason being is if we make a 5-time move up to $250, we will have people FOMO and buy in. And you know what? If they panic because they're not apes, they're going to send the price right back down. So just a gradual show of strength will enable other retail investors and other institutions to invest with confidence. And that's what Adam Aaron's doing ever so slowly and steadily, is creating the confidence needed for us to continue to buy and hold and buy some more. Keep buying. Let the institutions go ahead and go to war with each other. All it takes is one guy to say, you know what, I want to buy 5 million shares. They got deep pockets, and you never know if that's going to be the trigger that ignites the fire and have the shorts running for the door. And that's going to be a beautiful thing to see. This is Gabe. I'm signing out. Make sure you guys like, share, subscribe. And also, if you want this t-shirt, I'll pin that in the comments. Go ahead, click that link, show your support, show some love, and doesn't even matter if you don't. But either way, I still love you guys. Peace.